Broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone. Well, let's see here. I believe we're at office hours. Yes, hi. All right, let me get my screen up here. Welcome to another edition of Monday Office Hours. I'm your host, Jamie Hodge. Today's July 23rd. July is almost in the books. I've got Steve Gomez riding shotgun with me today. How's it going, Steve?
Hello, doing well. We're missing Scott, our marketing director, so just so you know, I am going to take care of recording the webinar today, and it will be uploaded to the YouTube channel later this evening.
Indeed, indeed. So we've got a nice crowd in here. Before we get started, as always, just want to take a moment here to make the lawyers happy and just make everybody aware that's in attendance, whether it's this webinar or any of the other 8 webinars that we host throughout the week, that all of the information that we share with you guys is for educational purposes only. If you do need investment advice, what to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or some other licensed individual that can legally help you out with that stuff. Once again, the information that we share with you guys is for educational purposes only. Okay, so before we move on, just want to make everybody aware that, of course, if you're a regular attendee, you know that we are right in the midst. Today is day 1 of our quarterly test drive. So we're going to have a lot of probably new, not new faces, but new names in here today. So we're going to reserve a little bit of time at the end for some general Q&A. So that we can field questions for the people in the test drive. But before we get going with the main presentation here, and of course this is also going to be very interesting for the new people as well. You're right in the beginning of a test drive of the most advanced scanning software out there available to the retail public. But we've built quite the community around the technology. So as I was alluding to earlier, not only do we have office hours webinar, but we've got the 5 o'clock p.m. Eastern webinars Monday through Thursday, and we've also got some additional ones that I'll tell you about here. But before we get into that, it all kind of starts with Barry's trading room, right? We've got a trading room with hundreds and hundreds of people in it every day. It's free of charge, and that's a great thing. If you've ever shopped around and looked at different trading rooms, they're not cheap, all right? And it's one of the added benefits that you get when you're a client here at Trade Ideas. And matter of fact, you don't even have to be a client. If you're still kicking the tires and want to see what the trading room is all about, get in there, get signed up. It's free to engage. And other than Barry being the best thing about the trading room, that price of 0.00 is a pretty good price. And Barry does a really good job at moderating the room, showing people how he uses our technology while executing live trades as well. So if you haven't been taking advantage of that resource, by all means, get in there and do that. Of course, today you got me and Steve with Office Hours Monday, and we pass the helm to Steve tomorrow, which is Tuesday. He does the Tuesday Trade of the Week webinars, and Andy Lindloff rides shotgun with him. And then, of course, on Wednesdays, we like to change it up a little bit, so we bring in the CEO and founder of Trade Ideas, Dan Merkin, along with our Chief Technology Officer, Brad Williams. Always interesting. Of course, the 5 p.m. Easterns, we round that out on Thursday with Andy's Trading Studio, and I ride shotgun with him. So, different voices, we keep it interesting, put a different spin on it every day. And then, of course, on Fridays, we take it even one step further, and we have more or less a free-for-all. From 11 a.m. to 2 p.m. Eastern, we allocate 3 hours and typically use most of it. So it's anything TI related, whether it's configuration issue or just general questions about functionality. It's come one, come all on the Friday support sessions. Now these guys right here are the ones that we've added not too long ago. Been a big hit. These were designed to replace the one-on-one training sessions that we had offered for, pretty much since inception, since 2003 when we first came online. We're having some growing pains. It's a good thing, but we've just got so many clients now. We've had to kind of do away with the one-on-ones because we just don't have the resources to accommodate anymore, and we've replaced that with the TI educational resources here, otherwise known as TI University. So on Mondays we have Beginner 101, Tuesdays 201, Wednesdays 301, And then Thursdays, advanced 401. Now, we do recommend that you take these in the order because, if you just jump right in for advanced 401, you don't have some of the building blocks that you need to completely understand it. So we do recommend that you take these guys in order. But these are the ones that start at 9 a.m. Eastern and usually go for about an hour and a half. So between these, the 5 p.m. Webinars, and the support session, that's a total of 9 educational webinars every week that you can take advantage of here. And I see some questions scrolling through here, so let me get through this and then we'll knock out the questions before we begin the main presentation here. Now, would be remiss if I didn't mention the AI module, or as I should say now, the AI modules. So our very first AI, Holly 1.0, we brought online back in January 2016, and she's done quite well against the S&P. And just kind of wanted to give everybody a peek with this bar graph here, the way that people are responding to it. Our active subscriber base has really just went up exponentially since we introduced the first AI module, and now we've got 2 more. So we've got a total of 3 AI modules, all acting differently, that you can key off of during your trading day. And we'll get more into that here in just a little bit. Also, myself, Steve Gomez, Andy Linloff, and Sean McLaughlin, the main educators here at the firm, at the behest of our marketing guy, when the market was up in the trees here, he was like, we probably should come up with a little ebook to tell everybody, well, when buy the dip stops, what are we going to do? And in essence, this is pretty much all about short selling. Of course, we're still in a bull market. Steve's going to point out the charts and all that good stuff here shortly. But since we released the book, we can't say that we specifically designed it to be released here, but we can see what happened, to the overall markets once we did release. And the people that read this book, they were able to put that knowledge base into use and really take advantage of some of these down days that we've been experiencing while we find our way back up to the top. So the ebook is free. All you have to do is go to this web address right here, download it, familiarize yourself with the content. It's pretty straightforward and easy to understand. Steve likes to say, chance favors the prepared mind. So when the market does turn, when we don't know when that's going to happen, could be a month, could be a year, could be 2 years. It makes me think back to 96-ish, 97, when Alan Greenspan was up there chirping about irrational exuberance. Well, guess what? That irrational exuberance went on for a number of years after he said that. But the bottom line is, once you familiarize yourself with these techniques, you'll have it in the old noggin. You'll be prepared when the time comes. You'll be ahead of the rest of the group. All right. So now into what we're going to speak about today. And as always, we let Steve kind of sketch out what's been happening, where we might be going on the major tracking ETF. So Steve, if you're ready, I'm going to kick the can over to you.
Sure, I'm ready. Send it over here.
And you can do your thing, sir.
All right, welcome to my desktop, everybody. This is the big daily chart of the S&P 500 ETF spiders. I'm going to start here with this. There's definitely a lot going on. We've got, a wedge that was formed in the last couple of months to the downside here with the 200-day moving average. The upside is a little trend line that I drew from all-time highs down to recent highs here, kind of forming that wedge that I've talked about after we had a big fall back here. The amplitude of that bounce got all the way back up, then back down. So it's almost like we plucked a rubber band and we're just kind of letting it settle back to equilibrium. But I like what I'm seeing here. Again, this major, this downward wedge here, we need to stay above that as long as possible to confirm that we did in fact break out of this wedge. But looking at horizontal lines, obviously this is a big one. There's a lot of supply, a lot of stock for sale right here on the S&P at about 280. And we tried last week and closed above it. Looks like last Wednesday, I'll call it. And then spent a little bit of pullback Thursday and Friday. And here we are today, right at these levels, just knocking on the door. There's, again, I've said it last week and I'll continue to say it this week. There is absolutely no case for the bears right now. Zero. There's no technical case to point at. and throw up any red flags or any caution. This is a very bullish looking chart in both the NASDAQ and the S&P. I like the fact that this 10-period moving average has been holding the price. Again, consolidation. I talk about pullback in price or sideways action over time. And the sideways action over time is definitely the more constructive and bullish of the two. And that's what we seem to have here. And today, well, this rising 10-period moving average that I put a lot of emphasis on caught the price, bounced it, and we closed right back above it, right at that orange line for the most part. I'll highlight your eyes to that tag that says 280.51. We're gapping up just a little bit in aftermarket and after hours because Google came out with earnings, and Google went out here around 1205 respectively. Well, you can see the green tag is showing the update. It's now at 1247, so it's up $40 after hours on pretty good smashing of earnings. They beat them pretty handily. Even if earnings had come in line, you know, they may have sold off the stock a little bit, but there's just no point in doing that when you crush the earnings the way Google did. So translate that over to the NASDAQ QQQ, and now this is where we're roughly trading on this buy tag, on this green tag, about 180.35. So coming into the close today, same look here on the Qs, a nice sideways action and wanting to bounce higher. And the Qs are even more constructive than the NASDAQ because this level back here, I'm going to move that line up basically to resistance point, and look at that. Look at how it lines up perfectly with today's lows. Resistance back here in early June is now today's support. That's a pivot line definition. And so that was all very constructive going into the close. But now we have earnings from Google, and so we're basically going to get a jump start tomorrow, I think. We're going to have a bit of a gap up and a bit of a kickstart. We've got Facebook and an Apple coming up as well. So a lot of the big companies that have a high weighting in the NASDAQ and S&P, they're going to help drive those indexes higher tomorrow. I firmly believe that with the earnings that we had today. So great looking chart there in the NASDAQ, nothing to be bearish about at all. We're just flirting and playing as you would expect on this pivot line here at 177.88 roughly. Again, it was prior resistance back here. The price action had to pull back and give it another push. And we pushed through, and now we've spent a good week closing with the prices above that orange line. Market's just looking for a reason to move higher, in my opinion. So there's absolutely no bearish case whatsoever. Take a look at the Russell 2000. This is also pretty solid. It's kind of putting in a cup and handle here, trying, but again, I'll put an orange line up here so you can see that is the prior all-time high in the Russell 2000 or the IWM ETF, and we're very close to moving up through that. Again, the earnings this week could very well be a catalyst to help push us out of this this little consolidation period that we were in. Going back to the spiders, it's about 1, 2, 3, 4, 5, 6, 7 days of sideways consolidation. And again, a big earnings week. I think that could be the catalyst for some moves higher. But again, the big takeaway is there's no reason whatsoever to be talking about the bearish case right now. These are all-time highs, and the momentum wheel continues to move up. The trade of the week, which I'll talk about tomorrow, did actually trigger today, and it's SONC, Sonic Burgers. You know, Shake Shack's been having a great run with a high amount of short sellers in that one. Well, the same thing is the case in Sonic. You have a lot of short sellers that are being stubborn. And this is not a 52-week high, guys. This is a bona fide all-time high. So if you're going to ride shorts through all-time highs along with a lot of other people that are also short and being stubborn, well, you might learn really quick that's not always the best method for trying to make money in the markets. Okay, a good question from Ahmet. You say this is bearish, but do you not have any concerns about the substantial volume increase for the drop at the beginning of the wedge? I've been dumbfounded, Ahmet, by the volume to the downside, moving higher on lighter volume. This is a great example. This is just one of many timestamps or time windows I'm looking for. You know, we have the big fall from all-time highs, huge volume. We bounce back up. We have another fall, a pickup in volume. But I can't base charts on what the volume's doing. Only the price pays, and I borrowed that from my good friend.
Right. Yeah.
Only the price action is going to give us the clue. This is just one example. I could go way, way back and look at all these down here. The same thing. We've been harping on this forever in this juggernaut of a bull market. The textbooks and the old playbook says, yeah, if you're going lower on higher volume and then moving back higher on lower volume, those could be the signs of distribution. But unfortunately, that hasn't worked out for the last 3 years now. So I get what you're saying, and there is a good argument to be made there, but the price action supersedes what the volume is showing us, and that's really the only way I could answer that. Um, Hopefully I answered that question okay. All right, so rambling aside, I'll pass it back to you, Jamie. That's all I got.
Yeah, good stuff. And, that has been a topic of conversation for a long time now.
Okay, good.
All right, here, I'll just grab it. There we go.
Grab it from me. All right.
Boom, boom, boom. Okay. All right. Let me get my list back over here. Okay, so we're going to talk about a lot of the same stuff that we always talk about. We're going to get into Holly trades and how to interact with Holly. We're going to take a look at some risk on, risk off scenarios, things of that nature. But as I always like to point out, expectations. We have to have some type of expectation going into each session. Now, mind you, not preconceived notions, but expectations based on metrics, right? Preconceived notions will get you in a lot of trouble. Just ask Steve or Andy or Sean or anybody that's been in the game for 20 plus years. Going in with a preconceived notion that's not really based on anything technical is a bad, well, it's a very slippery slope. And a lot of the times it'll work, and that's kind of like the kiss of death, because it'll get you into the mode and think that that's the way to do it. Kind of like what Steve was saying about volume. It doesn't make any sense that the volumes are high on the snap downs and weak on the run ups, but that is what that is the market that we're in. Here we can see my little top list here where I have the tracking ETFs. Look at these volume levels right here. SPYs finished below normal, Qs below normal, everything below normal. Dow was the big winner at about not even half, but yet already had SPY up there. We bounced nicely off the bottoms here and went up. So coming into the session, say after the first 15 minutes, what could we have expected, right? So I always like to point out my compare count windows because it's a very handy tool. It's just like any other study. A lot of the times they can be accurate, but of course it's not the holy grail. But it's just like any other study or indicator that you choose to use. A lot of the times we can find correlation. So if we look here, I've got the 15-minute candles up here on the SPY. We can see here we have the first candle. Now we did have quite, not too terribly of a wide range bar here, but a wick top and a wick bottom. And on my big cap market mover compare count window, which by the way is this window right here. This is also one of the windows that is in channel 4. And if I scroll all the way down to close to the bottom of my channel bar, you'll see channel 4 over here. This is the channel where myself, Steve, Andy, and Sean have placed all of our favorite windows. So after hearing me talk about this little guy right here, if you decide you want to give it a whirl, all you have to do is cruise over to channel 4, save it to your cloud, find a spot for it, and then you can start watching it. Now, what did I see here? First, let me explain, just give a brief synopsis of what the window looks for. It's a compare count window, and by the way, while we're on the topic here, if I can find my toolbar, it's hiding somewhere, there we go. If I click new here, we can see compare count windows. We can spawn all of the windows from the toolbar just by clicking on new and spawning the ones we want. Compare count windows are probably some of the most underutilized windows within the product, just simply because they're kind of strange, right? What are they? Well, if I pull this guy back over here and I right click and I pop into configure, we've got two different sides here, green and red side, and we can basically put inverse strategies in each side. So over here I've got stocks hitting a high. Pretty tame filter set here. I'm foregoing your typical daily volume requirements, and I'm saying the company has to be capitalized in excess of $4 billion. So we're only taking the temperature of the highly capitalized market, the highly capitalized stocks, which in my opinion is 4 billion and higher. Everybody's a little bit different. 5.4 billion is what you need to be a component of the S&P 500, but that doesn't guarantee you're going to be a component, but that is the minimum market cap. So I just kind of figured 4 billion would be a good place to start. So the long strategy is looking for stocks hitting highs, but we have to have accelerated 1 minute volume of 3 times normal or higher. And believe me, on the open, a lot of these stocks are doing much higher volume. So we've got that on the green data side. We've got the exact same filter set over here on the downside version, but it's going to be stocks hitting lows. So the underlying theme here is we're trying to get a bead on what might be going on with the institutions in that first 15 minutes, kind of give us an idea of what they might be up to for the rest of the day. Now, today we had a pretty substantial downside count, but at the same time, as I always like to say, know what neighborhood that you're in, know what to expect, and of course we have to reference the daily for that, right? And when we take a look at the SPY here and we see, you know, this little level building right here, well, unless we just really keep on going, you know, are we going to get through this level right here? And we can see today we just kind of, you know, a little wick on the top, a little wick on the bottom. But long story short, big downside momentum here. And then notice the gap in the yield curve, or not the yield curve, but we can see the frequency of these things as they are coming out. Now, my thoughts this morning were, well, you know, it's kind of an iffy day. I'm not just going to go hog wild trying to short things. Of course, during that first 15-minute period, the AIs were remaining pretty silent. And when they're not trading, well, that actually means something too. And we'll get into that a little bit further here in just a moment. So my theory, or, you know, since there's never any rush to trade until we kind of feel like we know what's going on, I'm thinking to myself, okay, I'm going to wait for these guys to get together here, right? And a lot of the times there's a correlation between when these lines cross and when either the top or the bottom could be put in. Now today was a little different because we ended up meeting and then we just kind of ended up intertwining here for a period of time. And of course we can look back here and we can go, okay, yeah, we took the ride up when these guys finished, but then when we crossed back over here, came down here and set a new lower low and wicked right back up. It wasn't until we broke this little level here that we kind of took off, and then, you know, the rest is history. But, you know, watching these things, sometimes the initial reading is good. What I will say is that typically, if we have a substantial run down or run up, that kind of skews the metrics here. But on a day like today, when we're butting up against these little support areas, we have to be very cautious about just jumping off one way or the other. So, you know, a correlation here between these guys intertwining and us kind of flopping around in the range, and then we broke to new highs and the AIs got active, and it kind of told us, hey, you know, the path of least resistance is long today. Of course, there were AI trades that were short as well. So let's do this. Let's just go ahead and get into how the AIs performed today and take a look at some of the risk-on opportunities, maybe a few trade rounds as well. And here we go. So I've got Holly Neo pulled up. Now, for those of you who might be seeing or, you know, experiencing the AI panels for the first time today, we've got 3 different AIs. We can access them via their respective channels over here, or we can switch around between them through our AI strategy panel by right-clicking, oops, don't want that guy, and coming down here and switching the segments. So we want to see Holly Grail, Holly 1.0, we click here, Holly 2.0, and Holly Neo. So we're just going to leave Neo up for the time being here and take a look at the trades. Now, number one, let's see when the first trade was triggered. Not until about 24 minutes into the session, 6:54. Of course, these are Pacific Standard Times. Market opens at 6:30. So about 24 minutes in, we got what was one of the craziest trades today. This little guy right here, FAMI, coming from Mighty Mouse. Now, Mighty Mouse, here we can see the strategy. Coming into the session, these are all the statistical probabilities that these guys showed up with today after all the back test and optimization were done the session before, which in this case was Friday night. So these strategies were waiting in the hopper all weekend, and then they got their moment in the sun today. So the first guy, Mighty Mouse, we had 64.2% chance of success for anything coming out of that strategy today. It issued 3 trades, and it hit 2 out of 3. So it performed today at 66.7%, slightly overperforming what the stats were coming into the session. And it just so happened this little guy was first out of the chute, and here we can see the entry signal right here, 411. Notice when I double click here, it's going to populate my intraday chart as well as my daily chart with all the proper tags. Red tag down here is our stop loss, entry price. Of course, sometimes the stop or the profit targets can't be seen here unless we really compress, but you can always click back over to the daily and clearly see what that profit target was. Quite a hefty and handsome profit target, I must say. So this little thing, it zoomed up immediately. I mean, here's the entry signal, 15-minute bar ends, the next 15-minute bar begins, it shoots all the way up here, comes back down. But when we look at Holly, you're like, wow, that thing went blotto. Why'd the AI only make 11 cents in it? And what I'm referencing here is risk off, right? You might also notice we can hit the toggle up here and we can put the strategy panel back into risk off, which we're seeing 44 cents total for the 10 trades in risk off mode, the more conservative mode. Risk on yielding $1.15. If we took more risk, instead of making 44 cents, we had a potential of $1.15 on these 10 trades. Now, risk on and risk off, not something that you have to pick before the day begins, right? Risk off is what you and I do all the time, and that's what Holly's doing. Obeying your rule set, right? We all have stop losses when we enter a trade for obvious reasons. Sometimes they don't work, and we have to limit our downside. So there are 5 reasons why Holly's going to exit that trade. Stop loss, profit target, either one of those guys are hit, or our timed hold. You can see right here all of these Holly strategies, whether it's Neo or any of the other 2 modules. They're designed around intraday hold times, and we can see we've got a wide range here all the way from 30 minutes out to 120 minutes and everything in between. So Mighty Mouse is designed around that 60-minute hold time. Now there are 2 other reasons why the AI can exit, and these were generated because in the very beginning we quickly realized, well, Holly was up in a trade and timed hold didn't come up, stop loss didn't get hit, profit target didn't get hit, it was up 50 cents, and then she let it revert back to a loser. That's a no-no, right? So she has the ability to close a winner or a loser early. In this case, profit save was initiated. When she closes a loser early, it's reduced risk. So we can see here, entry time. Now it's a small little sliver right here, but the shaded area is Holly's time in the trade in risk off mode. So we always like to say, you know, with what we have in Holly, what is her strong suit? What is her superpower? Bringing us these statistically weighted entries. Sometimes she exits really well, but other times not so much. And this is one of those cases here where let's focus on, okay, it's right in front of me. I thought I'd pulled it over. I want to point out this column, max profit. This is how much she was up the most while the trade was open. So way up here, she was up 45 cents, but by the time she closed it out, only up 11 cents, right? If we would have held that thing all day, now we'd be down 11 cents. So that's what risk on is showing us. What would have happened if we didn't close the trade out? And of course, these numbers are reflective of the close. They're going to vacillate in real time when the market is open. So at one point in time, risk on was up here, but quickly came down here. So at one time she was up 10%. Now, you know, hindsight's always 20/20. If we're in a mover like this and we're up 10% in less than 15, 20, 30 minutes, would we have exited? Maybe, maybe not. Maybe we would have taken half. Who knows? It depends on our rule set. So one of the more volatile trades that Holly spit out today just happened to be the very first one. So not a really good, clear example when we look for risk on opportunities, because when we're doing that, we want the spread. And notice that I just double clicked here and I resorted the blotter by risk on. We want the spread between what's showing on risk off and risk on to be big, right? Here we have 45 cents versus 67, But let's take a look at this one, which happened to be the only short trade that Holly Neo generated today, where she reduced the risk. She got out early, took a 2-cent loser, and boom, we'd be up 54 cents now. And this is a great example simply because of what it did shortly after the entry was made. Now, this is a short sell, right, where we sell thinking the price is going to go down and hopefully still buy the stock at cheaper than where we sold it. So the short sell was initiated right here, and right after the signal for quite a while, what do? We just kind of vacillated going in and out of that entry line. So we were never really out of the money that much. You know, we get in the money, then we're out of the money, in the money, out of the money. Never even tempted our stop loss up here, which is good. That's why they're there. But when I see something like this, I mean, you could have seen this trade an hour later after Holly was in it and went, ooh, I really like this. Because when we see a tight consolidation like this, buyers and sellers are equal. We could have easily even made an entry with a tighter stop here above this little consolidation area. But the bottom line is this. The longer the trade is open and it's not doing what the AI intended it to do, in this case go down, there's a time decay mechanism that kicks in, and the longer the trade is open and it's not moving in the proper direction, that's when she has the ability to pull the plug early. And in this case, you know what? I bet there were actually some traders maybe that did the same thing, and that was just your patience getting the best of you. But when I see something like this moving sideways for this amount of time, that's really a pattern that I like. So, patience was a virtue in this one. And then, even better, we can easily draw some lines here because this was a perfect setup to where, hey, once it comes down here and cracks these levels here, an excellent opportunity to press that position and perhaps add to it. So this is how it plays out. We see Holly closing the trade right here, which is also corresponding with the shaded area. And we're thinking to ourselves, well, I don't necessarily think this is a bad trade. It hasn't tempted my stop loss. And I think that there might be some additional move left in here. So I tell you what, Holly, I see you taking your 2-cent loser, but I think this trade's going to work out. I'm not going to go with you on this exit. I'm going to stay in it with my original stop loss, and we're going to see what happens. In other words, we're ignoring her exit criteria, and we're taking more risk. And in this case, we would have been rewarded, right? Whether we covered here, down here, we can see negative 2 cents versus 54 cents. That's a 56-cent spread in there, right? So even if we would have ended up making 20 cents, 30 cents, 40 cents, getting some of this spread is the name of the game when we're talking about risk on here. So to simplify things, when you go risk on, you're simply not going with Holly's exit criteria, and you're taking more risk because you feel comfortable with what the chart is telling you. Now, there also is another way to approach this. Do a little half and half until you get used to it, right? Hey, you are in 100 shares with Holly here. You see her making the exit. Okay, I'm going to peel out 50 shares with Holly. I'm going to take my 2-cent loser. I'm going to let that other half go risk on, assuming we like what's happening with the chart here. And of course, you would have been paid on that as well. So that's what risk on is all about. Now this guy right here, VZ, we could refer to this as what we call a trade around, right? I often like to equate Holly to just another person, just another trader sitting there that you have full access to. Steve, myself, Andy, Sean, we can all tell you stories because we're kind of old dudes that all started trading back in the mid-90s when technology wasn't near as advanced as it is today. We had to actually go to a trading office, quote unquote, where they had the high-speed T1 lines. Kind of laughable these days that was what was considered high-speed, T1, and specialized software, right? But that's what we had to do. And of course, we would be one of 15, 20, 30, 40 traders in that office, and we'd hear somebody bitching and moaning. There was one in every office. Guy's about to get stopped out, and we look, kind of glance at each other, and we're like, oh, this looks really good right now. We're going to get long while this guy's getting stopped out.
I remember
right?
those days.
Those were all the good old days. But anyway, so we see Holly in this trade. Maybe you were in it, maybe you weren't. a lot of the times you're not going to be in it simply because you can't keep up with all of these Holly trades. So whenever you do have these moments of clarity or a little bit of time to go, okay, all my stops are in place, all my, my house is in order, let's start perusing Holly trades and see what she's about to get stopped out in. Or maybe you caught it when it was down here, 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 and you're like, okay, put in the wick down here. Well, let's check out the daily. Okay, well, not the cleanest support level here, but once you start to see it wick off the bottom, maybe you pick here or here, and you're like, okay, well, I saw Holly get stopped out of this one. Now the bottom looks like it's been put in. That little wick makes me comfortable. We didn't do anything crazy here. This bar begins, and you think to yourself, I'm going to go long here. I'm going to do two things with that. I'm going to get a better price than Holly, and my stop loss is going to be less. Better price, less risk. And we can see what happened here after that little bottom got put in. So this is what we call a trade around, taking advantage of when the AI is down in something. Once again, the only reason you're looking at this chart is because you saw her, in essence, another trader in the position, and the timing was just a little bit off. That brings up another very good point here. The statistical probability for all of these strategies, it's good for the day. So whether we participated here and tried to get the better price and the better stop loss, or we simply did this when we saw it. I'm going to come back up here. I'm going to set a price alert for the second occurrence through that entry line. Sometimes, once again, as Steve likes to say, that second mouse gets the cheese. And that's what happened here. So two different opportunities. Once the bottom's been put in, or the supposed bottom, because we never know in real time as this thing is unfolding, get that better price, take low risk, or wait for the second push through the entry line.
Which question were you elaborating on there? I wanted to make sure we didn't miss one.
Well, that was just a trade around versus risk on, risk off. Did I miss a question?
Well, I guess it wasn't a question you were responding to. Nicholas asks, is it a good idea to combine a trading stop loss on the risk on, risk off modes? We do have a exit reason on their screen there. It's in green. There's two of them. It says profit save. A lot of times if the AI exits a profitable trade, it's doing so on the profit save, which is akin to the trailing stop that you asked about. So not completely sure on your question, but I wanted to point out that you can see the reasoning for the AI exiting a trade, whether it was reduced risk, which Jamie was talking about earlier, and stock trending sideways and maybe even bleeding. It's like, okay, it's not doing what the AI thought it would do. Why are we going to stick around for something that's not doing what we thought we do? And like he said, a lot of human traders might have punched out of that one by now. But I just wanted to call your attention to the profit save exit reason. That is very similar to a trailing stop that you're asking about. So if you see the AI do that, it's up to you. If you want to act in the same fashion, it's just a suggestion.
Right, and it leads to another good point. We get the statistical probability on the entries, which is a pretty huge advantage, all right, compared to the way most people are doing it. You ask most people out there, most traders, hey, how are you applying statistical probability to your trading routine?
The entry.
Probably just get a lot of blank stares, right? So, we always talk about man with machine. The machine does all the heavy lifting, does all the calculations that it's impossible for us to do to arrive at these data sets. But sometimes, if we're proficient enough and got enough seat time, we can sometimes manage the exits better, right? Because we chart read. That's a huge part of trading, right? Imagine if you woke up tomorrow and charts went, what? No charts? What am I going to do? How am I going to know where I am? I mean, it's like driving blind, right? So, Holly's good at statistical analysis, but she doesn't read chart patterns like we do, right? So that's why a lot of the times the AI can just close the trade prematurely, whereas we can take another second look and go, yeah, this is a great opportunity to go risk on. We're handling the exit. Let Holly handle the entries. We handle the exits. Let Holly handle the entries, right? That's the best way to use this system, in my opinion. All right, so other than that, and of course, I thought we'd be finishing early, but we've already eaten through 45 minutes, and that's without Scott eating up 10 minutes on surveys and whatnot. So I guess I better put the gas on here, Steve. So
All right.
that's well, we've had a couple different examples here. We've had risk on examples. We've got a trade around examples. Now, the last part of the Holly part here is that between Neo having 10 trades, Holly AI having 16, and Holly 2.0 having 13, so we got 29, 39 trades between all the AIs. That's good. It's good data to have at the end of your trading day. So what I'm getting at here is Holly price alerts, going through and setting price alerts on things that you saw Holly trigger today on an intraday basis. It's a really good habit to get into. Go through all the charts and examine the dailies, because this leads into another question that we get all the time. Well, it looks like all this stuff is just for day trading. Is there any value for people who swing trade and hold multiple days? Why, absolutely. Absolutely there is. Couple of great examples that we're going to talk about right here. RETA. Of course, Sean, he's one of our educators as well. He was talking about RETA all last week, opened up a nice swing trade on it, said these are my profit targets, and it just boom, boom, boom. He was like, he was out before Friday because all the profit targets got hit. And then, of course, as Murphy's Law would dictate, not only a gap up, but a huge green bar. I mean, haven't seen, which one of these things is not like the other. But the bottom line is this. Look at all the other times that Holly, the original AI, was saying to buy Rita. And if you're a long-term trader and you're, fairly proficient at chart reading, would it have been that big of a leap to go, wow, this thing looks really good on a daily basis. I'm just going to try to hang in here. And boy, she was so right on this. It's not even funny, right? Another good one was, another good example of that type of action is this, right? So every time we get an intraday signal from Holly, it's going to tag the day that it was signaled, and then you can go back and go, okay, you might scan through 30 of these and realize that 4 of them are ones that I like, but now you got 4 things moving forward derived from today's Holly data. So by the end of the week, you might have 40, 50 price alerts, all derived from the AI Holly, which is geared towards intraday, but now you're gleaning great swing trade setups from the AI as well. All right, Steve, looks like you're keeping the questions caught up here. And am I still coming through okay? Because I just got a notification
No,
that
you
I might
sound
be
good.
having.
No, you
Okay.
sound good. Somebody was asking if Holly takes a look at market filters, meaning how much size is on the bid and how much size is on the offer and what's the spread and all that. And the answer is no. It comes off time and sales. The actual trades will trigger a Holly trigger just like our price alerts do. And I sent a caveat over there, to Matt who asked that question. It's like, we don't even trust him these days. I don't know if you guys realize it, but the algorithms in the high frequency trading, they have about a 300 microsecond advantage, which means if you send your order, they don't have to accept the order because they actually have the time to look around the dark pools, 13 dark pools. And if they can't make a penny or two on your incoming order, they don't want to be good for it. They'll just back away. I've seen it time and time again, starting all the way back in 2008. So I don't trust what I see. Andy and myself used to run a desktop sharing service, and Andy had, one day had like 6,000 shares of a pretty liquid stock, and we could all see the bid was there. He sends enter 6,000 shares to the bid and only got filled on 3,200 of it. Everybody else fled, even though they were showing 20,000 to buy. So it's a wonderful game of poker out there, and we can never assume that what somebody says they're advertising for, that they'll actually be good for. So that's one of the reasons we don't do that.
Right, and I will clarify that because that's how Steve and myself and Dan back in the SOS days, that's what we played. We played the order book. There was a 99% chance that what you saw was going to be there when you went to hit it. Well, they changed the systems all up, and it's not like that anymore. So I think a lot of people put way too much emphasis on level 2 because guess what? It doesn't matter if there's a 50,000 share bid there that you're using as your safety net in case you're wrong. It might just disappear.
Level 2 has turned into a house of mirrors, as far as I'm concerned.
Yeah, it's just another way for them to any kind of book these days is just another way for the exchanges to generate more fees, in essence. Okay, so got a little bit of time here left. Now, we talked about Holly in detail, but we've got so much more available at Trade Ideas. So I always like to point out one of my favorite windows, which is this guy right here, Turbo Up, Family No Resistance. Now, hey, of course, look what was coming through here today, all day, like clockwork, RETA. And you might think, well, man, I missed the boat here. Look, it's too much, too much too late, right? Too little too late. Well, look at my 15-minute chart. We did have a nice little 1, 2, 3, 4 for the first hour and 15, just ran up. A lot of people look at this and go, it was probably, let's see, it is, yeah, we were up here during this little break right here. A lot of people would look at that and go, too scary, too much energy expenditure. I'm never going to touch that. Well, look at my intraday, right? Got a little run up, got a little flag action, and then we have a pop to new highs right here. So what I did is I put, and by the way, ladies and gents, this is a multi-strategy window. It's got 3 different versions of the strategy in here. If we take a peek, just segregated by market cap, 4 billion and higher, 2 to 4 billion is the blue colors, and actually RETA market cap is below 2 billion. But that doesn't really mean anything. All we're really focusing on here is the chart. So I just took the liberty of popping that window out so you can see right here. I think I'm on the right one. I got a little ahead of myself here. There we go. Okay, so you can see right here, 8:24 Pacific Standard Time, RETA new high, 1 minute volume, 46 times normal, because 100 is normal here, 46 times normal. So even if you bought the top of that candle right there, ooh, big deal, right? Pretty easy to figure out what our risk might be here, and boom, off to the races. Hey, we got another opportunity right here that sets up. So even though a lot of people might have looked at this and balked, what's happening on the intraday? Can we make the entry? Is the risk acceptable? And this thing was just a monster on volume. And of course, volume is no guarantee, but it's like gas in the tank of the car. You got 1/8 of a tank and you slam on the gas, you'll take off like a bat out of hell, but you'll stop pretty soon after that. Well, this guy had a full tank and a backup tank and then solar panels on top, and it speaks for itself, right? Simple setup with a range break, a little bull flag, and then boom, off to the races. Now, the added benefit of the guys coming through here is the second part of this name here, no resistance. When we look at the daily and look to the left, no matter how far we compress it, these guys are also going to be at all-time highs. So there's no guarantee that something's going to do this, but it did today, right? It's a very nice attribute to have in a long trade with massive volume where you have a nice snuggly setup on the intraday. Also, another one that came through today, as soon as I saw this little guy at this time, I'm like, bank, looks like a good trade to me, as this, my lines got out of whack there. But we have not near as pretty of a consolidation, these a little bit more stretched out, but the song is the same. Boom, it popped above here. What did it do immediately? Took a little regression back down here, this line right here. If you were in this, looking at this when this was in play, you would have seen this shading down here, and the smart stop was down here. It adjusts since we're later in the day, but I've drawn the line here, right here. This was the stop, the play, takes a little regression, back down, and then back up. And this little guy is busting out too, right? So once again, some really simple type setups, and if you download that ebook that we were referencing earlier, you're going to notice that I've got the same thing, the same type of pattern, just the inverse version for going short. So some of the more simple, easy to identify plays with good risk, high volume, and just some quality stuff coming out of there. Once again, this window is available, just as all of our favorite windows are, in channel 4. And I do believe we've come to the end of fun time here, ladies and gentlemen. We got about 5-6 minutes left. So at this point in time, since it is test drive week, we can open up the floor here for a couple of questions. And I see a couple,
happy fun time
coming through here. Yeah, happy fun time. Can the stop price be displayed on the chart? Yes, Bill. And we can see here, I could just pull up the stock at random here. And we can see what the shaded area, if I was looking at Tesla going into the close, this would have been my profit target area, stop loss. The shaded area is corresponding with the smart stop and the profit target tags. And we can also view that information on the daily as well. Thank you, Nicholas. Zen as a swing short to the bottom of uptrend channel. Yeah, Zen was also one of the ATHers today, all right? Popping all-time highs. Let's see here, but let's get back to the question. It's a swing short to bottom of uptrend channel. So Steve, you want to weigh in on that one? Talking about this area, are we talking about this little channel?
Swing short. I wouldn't swing Zen short. Zen looks like it wants to keep on going higher. I think it also has there's no real short squeeze going on in there. I mean, that's just a beautiful.
Oh, I missed out on the key word there, short. Okay, I got it now.
That's just a beautiful uptrend, and
it is.
I don't know if I'd want to be the one to step in front of that locomotive. I would rather wait for a big old blow off. The only way I would get interested in shorting an uptrend is maybe for a short period of time after a big old blow off to the upside, where you have a lot of buying and then a lot of reversal intraday, so you get those giant topping candles with long tails. Those are the only ones I'm interested in, and even attempting to maybe try and short after a giant long trend such as Zen here. This thing looks really powerful. As a matter of fact, I don't know if anybody was in my Tuesday webinar last week. I gave out 8 price alerts in a cloud link, and Zen was one of them, and that one's been doing pretty well since then. So I'm not seeing any reason to short something like that.
I concur, Doctor. I mean, that just looks like a freight train waiting to just go, go, go. Thank you, Hank, for the compliment and a link to the ebook again. Yes, here's the link right here. Basically just trade ideas or trade-ideas.com, which is our homepage, /ebook. And that'll take you to the download for the ebook. All right, on the channel bar, I see my channel 1 and 2 are these channels that you have designed. Now, Steve, to be quite honest with you, I haven't tried to save my layouts into these channels yet.
Me neither. I haven't.
Yeah. These were designed because before we had these, people kept asking us. I'd like to save my own layout as a channel, but it wasn't available. So this is that. This is the request that all the users kept making so that they can put we can put our default layout or 2 different layouts and have them represented in the channel bar here. But to be quite honest with you, Steve, I just haven't had the time to explore this myself.
One of the reasons I haven't had the time is because I can't even get them to show up on my channel bar. I just closed it and opened up a new one, and it starts with my cloud and then Holly.
So okay, well, let me live dangerously here. I just clicked on my channels. Now, what did it open? It opened up it looks like it opened up the 420 channel, right?
Yeah.
So how would I change that? How would I save it? You know what? We're going to have to dig into this and get back to you guys on it.
I haven't even had a chance to play with it.
There are many things I don't know the answers to, but this is one of them at this point in time. But hopefully we can get that to you in one of the following webinars. Okay, trendline alerts in the works. Bill's asking, are trendline alerts in the works?
I'm not sure that's something we can do, actually. There's no filter. Basically, our alerts work off events and filters, and we would have to have trade ideas trained to learn how to identify trends, and I think that just might be too many data points.
Yes, sir. Yes, sir. All right, last call for questions. We got a couple of minutes left, and then we'll wrap it up for the day. Thanks, Mike. Pretty good crowd in here today. Thanks, everybody, for attending. And remember, we have the Trade of the Week tomorrow. Then Wednesday, we've got Q&A with Dan and Brad. Thursday, Andy's Trading Studio, plus all of the TI University webinars as well.
Well, for this week, the TI University was morphed into a 2-hour like Friday tech support session. Just every day, we're here for 2 hours from 12 to 2 Eastern. You guys drive the content. We're doing that for the test drivers so they can try and get the learning curve as quickly as possible.
Bill's asking, is it better to use Turbo Family Up or AI Trade Alerts? And, well, There's not an answer for that, Bill. I wouldn't say one is better than the other. Holly's going to do her thing each and every day. The turbo up and downs, that's a very specific, we always want a nice, specific pattern for that, just like what we saw on RETA. We need the pattern. In other words, if this is the animal that we're hunting right here, this nice smooth little consolidation before the break to high, if this thing was all stretched out, no. And just keep in mind, you might have to cycle through 10, 20, 30 symbols coming through the turbo up alerts before we find where the timing is proper and the chart is accurate, right? It's we know that they're going to show up, but we know that not everyone is going to be pristine, but we know with that configuration they will show up eventually. So we might have to scroll through 20, 30 charts before that right one appears, but hey, welcome to trading. All right, ladies and gentlemen, it's that time. So once again, thank you for attending. For those of you on the test drive, welcome. We will see you tomorrow. Steve, thanks for riding shotgun and doing your thing.
You're welcome.
And we'll see everybody tomorrow.
Yeah, I'll have the recording up on our YouTube channel later this evening.
Perfect. All right, everybody, have a great evening. Have a nice, profitable tomorrow, and we'll see you on the flip side. Bye-bye.
All right.